So we all know that consumer confidence is soaring, and our chart of the day shows that the biggest reason why is because of the labor market. Miles, take it away.
All right, well, one of our recent themes here on Yahoo Finance has been the idea that the economy for a lot of people is a simple thumbs up, thumbs down. Do you have a job or do you not have a job? If you do have a job, things are good. People are happy, they're making money, they can spend that money, everybody wins. If you don't have a job, everything is terrible. So this chart that we are looking at comes to us from the Conference Board. This is what economists refer to as the labor market differential. It is the spread between people in this survey who say that jobs are plentiful and those in the survey who say that jobs are hard to find. The spread right now, 34.4 points. That is the highest that we've seen since January of 2001. Essentially, this chart is screaming to you that people think there are tons of jobs out there. If they wanted to get a different job, they could go get one. And that because of that confidence in the labor market, we continue to see consumer confidence numbers overall near those 17, 18-year highs that we had been getting in September before the stock market volatility. And is another reminder to the investor class that even though the decline in stock prices is hurting a lot of people's portfolios, a lot of Americans aren't invested, and a lot of Americans don't pay attention to the stock market. They pay attention to the labor market.
Do you think this is some type of short-term peak? I imagine people will be looking at this GM news over the next couple weeks, and hey, maybe the job market is near a peak, and maybe I can't find a job so easily as I did this year.
But perhaps, right? I mean, obviously in Michigan and Ohio, people who are working at that GM plant are going to be impacted by this. But I think from a macro point of view, we are seeing, 200,000 plus jobs per month created in the economy. 250,000 in October. We've seen 218,000 per month on average for the last 3 months. We're going to create over 3 million jobs in 2018 in the 9th full year of an economic recovery that began back in 2009. We've now had, 5-6 years of college students come into the economy with the labor market on the upswing. There are a lot of people coming into their prime age working years. I am right in the wheelhouse of this demographic that is looking around saying, what are you talking about? Things are bad. Things are great. And I think that the more of that happens, the more we're going to continue to see consumer spending. We know that's about 70% of GDP overall. And yeah, the chart obviously goes up a lot. The last time it went up a lot, it then came down a lot. But these charts are not leading indicators. They're actually lagging indicators of where the economy's been. And so, yeah, will this chart roll over when the economy turns into recession? Yes, but this is not a chart that's going to tell you the economy is about to go into recession. This chart lets you know that as consumers look back and they say, what's been going on in my life? What could I do with my job if I needed to do something else? That things are still very strong.
What feels different than the other peaks is the quality of the jobs and some of the what people are getting paid around them as well. I don't think that conversation at least was happening around the 2000s and the jobs that we are losing now. But I mean, it's certainly interesting to look at. It's encouraging.
I mean, I think so. To that point on wages. People in the lowest decile of earnings have seen wages rise the fastest over the last 2 years. That we know. People in the lowest third of incomes have seen wages rise 4.1%. Overall, the average nationally is 3.1%. I think the notion that all the jobs created during this recovery are crappy, one, was never quite right, and two, is dying very quickly. And so just when you look at the shape of the economy, where's the economy going to go? What's it going to be driven by? It's always going to be driven by consumers. What are consumers? People who work. It's just three of us here, right? Yep. It's just regular people who work and then spend that money. And I think that the more that we see that trend in place, the less that all the stuff about GM and the stock market and tariffs, all that, the less that's going to matter. Now, tariffs, separate issue, but I think right now, you look at the labor market, you say the U.S. economy is in great shape.
I'm glad we're just regular people.
This killer chart,
we're just
as always.
Three regular people. I love it.
Three Joes, right?
Great chart, Miles. We're going to be back with the closing bell right after this.